We've been talking a lot about these special purpose companies and the general idea that it's offered some companies an alternative to either getting listed or really just getting a little bit more attention and a little bit more money than they would have gotten through, I guess, the normal channels. I'm wondering, what exactly did you find most attractive about raising funds in this way, and what do you plan to do with the money?
Well, it's a great environment for SPAC fundraising. Obviously, we were very successful. In a traditional environment, a great private company would have no problem IPOing itself or going public or selling perhaps itself or a portion of itself to a private equity sponsor or selling itself to a larger strategic company in its space. The problem with the current environment that you're seeing today is that the strategics, the big corporate consolidators, have, for the large part, suspended guidance for the year. And if you're the CEO of a large public company, and I was one for many years, you can't go into your boardroom one day and say, gentlemen, ladies and gentlemen, I suspend guidance, and then the next day propose a $2 billion acquisition. So there's going to be deals by strategics, but they're going to be somewhat flat-footed for the next while. Private equity sponsors, on the other hand, are very much dependent on the leveraged loan market, which has been pretty choppy over the last few months. So for a good private company, a company in a space that we know, that we think we can even help accelerate, improve, we think the SPAC alternative is going to be a great place for them.
Sort of a perfect storm that you're outlining there, Doug. And you bring the expertise from Verifone, of course, you know, technology, payments, that sort of area in particular. Your co-founder, of course, knows an awful lot about banking, having been the CFO of JP Morgan. Talk to us about where you look for the opportunities now.
Well, the SPAC comes out of Hudson Executive Capital, which is a hedge fund with over $1 billion under management that both Doug Bronstein and I co-manage. And over the last 5 years, we've invested in fintech, financial services, and life sciences, healthcare for the most part, some other areas as well, and developed fairly specific expertise in small and mid-cap, call it $1 to $3 billion market cap public companies. So the SPAC is really just a pivot to the left or pivot to the right, if you will, to look and bring our expertise and the expertise of our CEO network, the people that we've been dealing with for the last 35 years collectively, into sourcing and improving private companies as well. So healthcare, fintech, and financial services banking.
And so what about, I mean, start with healthcare for me and just kind of give me a little bit more of a sense of what within that industry, what within that sector you're finding most attractive at this point.
I mean, there's no question on anyone's mind that the U.S. healthcare system is a big workflow problem needing to be solved. So there's a number of businesses that use software, use systems to streamline what is a very convoluted place for providers, insurance companies, and for consumers. Also, healthcare today and healthcare management is very much in need of many of the systems that financial technology has brought to banking in order to reduce fraud, streamline workflow processing, a better underwrite, and ultimately bring better value to consumers. So we think it's a great space.
Great space. How is this great for the investor base right now? I'm interested, Doug, that, you know, we've seen Blackman be announcing one. We have seen some companies really follow this route. DraftKings, of course, coming to the public market in this sort of manner. What is it that you can offer? Is it because the lack of competition, you're able to get a better price, or because of your expertise, you're able to drive further growth? What is it that really benefits the investor base, not just, of course, the opportunities you can source?
That's a great question. Most IPOs have a CEO that's on his first time IPO. What Doug Bronstein and I bring to the table, and our board of directors, including Bob Greifeld, the former CEO of NASDAQ, is a mentorship and a comfort area to be able to bring the company forward into the public markets in a much more chaperoned way. We're also able to bring our network of advisors everywhere to help the company hyper-accelerate growth in markets that they're not already in. And we think we offer a great partnership program for a company looking to go public that otherwise would be in a more difficult place.
And so, Doug, we can't let you go without just getting your thoughts here on some of the broader economic trends. I'm just curious, when you look at just the general downturn we're in, the recession that we're in, or may even be out of at this point, what's your general outlook going forward, not only for the U.S. economy, but globally?
Well, I agree with your last guess that the U.S. equity markets perhaps got a little ahead of itself. Whenever you have something as structurally unanticipated and dramatic as what we've experienced over the last 3 months, when things don't just get back to normal overnight, there's certain businesses that are going to take a while to recover. There's consumer behavior, especially as it relates to commercial real estate, to concert venues, other things like that, that's going to be different for the next 12 or 18 months. So I think as an investor, we're always behind the U.S. Economy's ability to reinvent itself. But it's not going to be a straight line. It's not going to be a one-way ticket to new highs. I think you're going to see more days like you saw yesterday or between now and then. But ultimately, the U.S. economy, unlike any other economy in the world, is the place where we reinvent ourselves, we adapt, and we continue and we go forward.